So, good morning, everyone. It's my pleasure to be here today with all of you in this important topic we're about to discuss. So, this side event is being organized by CAVE, the Central American Integration Bank, and Taiwan ICDF. And it's very important for us as a region in Central America to have these topics being talked about because having people centered at the core of climate finance, it's definitely one of the needs for our region. So without further ado, I want to start with this event called Towards Accountable Climate Finance, establishing a people-centric financial mechanism to facilitate a just transition. And I would like to give the floor to Mr. Alex Chai so he can have an opening remark and then we can talk a little bit more with our panelists. That is a great team that we have pulled together today. So, Mr. Alex, please.
Good morning, everyone. Miss Irene Rodriguez, Miss Sophia Chen, Miss Tony Greenham, and Mr. Liu. On behalf of the International Cooperation and Development Fund of Taiwan ICDF, it is my great pleasure to address today's event. First, I would like to express my gratitude to CABE for co-organizing this event alongside with the Taiwan ICDF. Together, we have built this platform to discuss people-centric financial mechanism and their role in just transition to a green economy. But what do we mean by people-centric and just transition? Simply put, these terms express that benefits of a sustainable society should be shared throughout the population, while also supporting those who may lose economically. This is the third consecutive year of Taiwan ICDF is organizing a side event with CABE at the United Nations Climate Change Conference. In 2023, we are highlighting our efforts to assist government and business in coping with transition-related challenges and inequalities. Perhaps more importantly, we are sharing our progress with bringing vulnerable groups such as women, youth, and low-income households into the conversation by providing them with targeted assistance. In addition, we are discussing our success with catalyzing resources from the public and private sectors for the benefit of all people. The world is facing persistent extreme weather and unprecedented natural disasters. Record-breaking droughts, heat waves, and floods plague the world. The ongoing climate emergency threatens the lives and livelihood of all people, as well as the health and the security of the ecosystem we all rely on. If left unaddressed, climate change will push up to 130 million people into poverty within the next 10 years and generate a 2% loss in global GDP per capita by 2030. As climate change grows in intensity, it is imperative we step up and take concrete actions to achieve net zero emission by 2050. However, if transition initiatives and policies are not planned and managed carefully, they can inadvertently harm economics, livelihood, and even the environment. Therefore, we must ensure that climate actions address both mitigation and adaptations in ways that are as fair and inclusive as possible so that no one is left behind. While governments have a fundamental role in playing in the just transition, business also play a significant part of this societal shift. Each year, more companies and investors commit themselves to sustainability, including by developing green technologies, adopting green business model, and making green investments. At the same time, we are witnessing new financial mechanisms being developed to finance such initiatives and improve government's access to funds for sustainable infrastructure and measures. In fact, this is why we are here today to discuss how people-centric financial mechanism can enable a just transition to a net zero economy. We are delighted to have experts from our own development organizations, CABE and the Taiwan CDF. I would also like to welcome our guests from leading public-private financial institutions, including British Business Bank, a government-owned development bank, and Taiwan's KC Financial Holding Companies. They will also share their experience and the insights to lay the work for green, equitable, and inclusive development. The world is still in the middle of fighting climate change. As a responsible member of the international community, Taiwan is committed to assisting our allied and our like-minded countries with overcoming this crisis. I'm honored to share with you today Taiwan's 4 major strategies for achieving net zero, compromising energy transition, industrial transformation, life transformation, and the social transformation. The Taiwan CDF is very willing to share this experience and the practice, and will continue to work together with our development partners to build a path towards a sustainable, fair, and inclusive future. In closing, I would look forward to the great success of this event and wish every one of you good health. Thank you.
Thank you, Mr. Shai, for having a review of what's our objective today to discuss about. So I think it's very important for us to reflect on how blended finance and other financial mechanisms that we're going to be talking about today are so important to bring about the issue of climate finance accountability, which needs a system arrangement and a coordination among governments and aid providers, stakeholders, and investors, especially in regions with a lot of vulnerable communities that are looking towards having de-risk economic sectors through warranties, attracting private investment with matching funds and incentives for investors, and also to increase resilience by reducing the exposure to shocks and stressors for our vulnerable communities in Central America, but also to build adaptive capacity especially. So with that in mind, we look toward discussing blended finance for Central America and some cases in Europe about what for small companies have been doing the British bank. So we can help address issues like high poverty rates, high inequality, and climate change vulnerability, which are 3 problems that we are here to talk about today with this focus on blended finance. So we have some expected outcomes today. So we explore the role of regional development banks, climate funds, development agencies in supporting vulnerable communities, discussing the potential of blended finance solutions, reflecting on how financial institutions can play a role in capital allocation for vulnerable communities and towards a just transition, exchange ideas and best practices on how to attract the private sector in climate financing and scaling up the impact that is just an urgency right now. So without further ado, I want to explain how the session will go. So we have a 10-minute presentation by each of our panelists, and then we will all sit here so we can have a little discussion on the topics. So now I would like to invite and take the floor to Mr. Liu Xinhang, Director of the Department of Lending and Investment from Taiwan ICDF. So Mr. Liu, please be welcome, and the floor is yours.
Thank you, moderator, for your kind introductions. And I'm Jonathan Liu, coming from Taiwan ICDF. And it's my honor to be here again and meet so many lots of new friends. and all friends I've seen before. And today I would like to share all of you some of my engagement, how we financially support the vulnerable groups in climate adaptations and toward social accountabilities. And this is today's skeleton of the slide. And first of all, I will just give you some short introduction of Taiwan ICDF, what we do, and what strategy we have for these kinds of vulnerable groups. And just talk about following by global risk and climate change challenges. And following by our engagement in this, especially in these developing countries, how we take the climate actions or include financing activity for these disadvantaged groups, and after the conclusions for you. And first of all, I will say that Taiwan ICDF is 100% government-funded foreign aid agency in Taiwan, and our core competence involves providing people, capital, knowledge, and technology to support the economic development and to enhance the human resources, as well as to promoting bilateral relationships with like-minded countries and like-minded institutions. And so our objectives mainly focus on 4 strategies. Just you see on the slide for your right side. And first, we will draw on our Taiwan's comparative advantages, and followed by responding our partner country needs. And of course, we will integrate the public and the private sector resources together, and after all, to strengthen the cooperation relationships. And so far, we have 21 technical missions with around 230 professional staffs overseas in the field to carry out 74 ongoing programs in 33 countries. And our priorities, our work is tailor-made to local needs of each different countries. Our investment covers a variety of development issues. So we select the agricultural, environment, public health, and education, ICT, environmental, and MSME as our priorities for disadvantaged groups. And here, allow me to just point out some relations between the climate change versus global risk. According to a global risk report 2023, the world actually faces a set of risks that feel both wholly new or a little bit familiar. So the next decade will be featured by environmental and social crises. Sometimes driven by underlying geopolitical or economic trend. And you can see that the cost of living crisis is ranked as the most severe risk over the next 2 years. And I will say that it cannot be peaking in the short terms. And the cost of living crisis, the biodiversity loss and the ecosystems collapse is regarded as one of the fastest intensifying risk over the next 10 years. And all 6 environmental risks are listed in top 10 risks over the next decade. So how about the challenge for vulnerables? Here, I would like to pick 2 groups as our discuss points. First is the women, and the second one is small-scale producers. It's kind of a gender issue and sex issues. So climate change impacts on society and the socials are diverse, but they are all lead to an increase in the vulnerabilities of people and in the natural systems. So across the world, the women often experience more significant burdens from climate change. Particularly in the region they are responsible for livelihood, natural disaster, and food and water scarcities make their lives more at risk. So in many developing countries, small-scale producers always play pivotal roles in informal sectors, and the natural disaster caused by climate change, such as a rainfall pattern change and pest outbreak, can threaten the food security, and small-scale producers are more likely to experience economic hardships as they often lack of access to resources, credit, and land properties. And let me just give you some cases of our engagement for climate actions. And the first case is our partnership with Central America Bank for Economic Integrations in Guatemala. Basically, this is the first time the Taiwan ICDF and the CAPE cooperate on gender issues. And these facilities basically covers credit guarantee, soft loan, and technical assistance, which are going to improve the woman's ability to access the financial resources by sharing the credit risk with the financial institutions. In the meantime, the technical assistance are also introduced for the financial institution under the CAPE global credit lines, and to strengthen their ability to develop more appropriate financial products and services only for women. That's very special is that on this case, the European Union and UN Women have joined this guarantee fund as well. And through these platforms, the Taiwan ICDF can work very closely with international partners, very closely to contribute the gender equalities and toward to a social accountability in Central America. And this case, I will talk about the facility for emergency and the crisis. And as you may know, in recent years, the hurricane and flood have caused large loss of life and properties in Latin America. The small-scale producers are most affected by these natural disasters, which make more severe poverties. So even there is a wide range of financial services providers, such as credit union, microfinance institutions. However, they often face the difficulty of a liquidity shortage. So in view of this, the Taiwan ICDF and the IDB lab, IDB is International Inter-American Development Bank lab, cooperate with Covelo Foundations and local impact investors to create regional financial facilities to provide microfinancial institutions with sufficient liquidity. The facility also enables a flexible response to crises of economic recessions caused by post-COVID-19 or post-disasters. So I'm sure that it's very imperative for the small-scale producers to recover their productive activities and to improve their quality of life as soon as possible. So therefore, the potential use of this financing includes the working capital, house repairs, and equipment replacement. Next one. Okay. Next one, please. No, that's my. Yeah, next slide. Oh yeah, okay. And this facility I would like to share with you is we call it CREF. It's a credit risk abatement facility. This facility is actually an integrated solution for green finance in Caribbean regions, small island states. It was launched by CARICOM Development Fund in 2020 and comprised 3 pillars. First is the credit risk enhancement and technical assistance, as well as green financings. We just signed a contribution agreement with CDF last month to offer additional funding. Many use on partial credit guarantees that would reduce the credit risk faced by financial institutions when they have found some kinds of on-lending operation to women-led enterprises for renewable energy or energy efficiency investment. So the women-led enterprises with viable green business models could be financially supported by local financial institutions under this framework. They don't need to worry about how insufficient collateral or transaction records or credit record they have. They don't need to worry about that. So the facility actually can essentially address the market value. The market value, that's the values of market could provide adequate or affordable financing for women-led enterprises interested in renewable energy and energy efficiency investment. And in conclusions, I will say that the impacts of climate change are not just the main issues of these centuries. And many disadvantaged groups still face a number of social, economic, psychological, or physical limitations that make them difficult to become bankable. So we got to pay more attention on building up the financial literacies for them to foster savings and money management or some upgraded literacy of financial management. And finally, access to the credit system in the market. And secondly, I will say that under the financial constraints of the 8 ODA resources we have, as a foreign aid agency here, Taiwan ICDF are happy to play the roles of a catalyst to partnership with multilateral or bilateral like-minded countries or institutions, and harmonize the private sectors and private sectors resources together to amplify the fundings or financing effect, whatever is in forms of grants or loans from different stakeholders mandate to achieve. I conclude here and thank you for listening.
Thank you, Mr. Liu. So now I call to the floor to Mrs. Sophia Shen, Chief Investment Officer from Cathay Financial Holding Company. So we'll receive her with a round of applause, please.
Good morning. In the next 10 to 15 minutes, I will share mainly two parts. One is our observation on blended finance, and I will show some cases how it works, which I think should start to bring confidence for private sector to engage more. And I will spend the second part, a few minutes, to share Cathay's effort on climate action and sustainable finance. According to Swiss Re in 2022, the world already suffered over 280 billion economic losses from natural disasters. And if we see this, the number is the cases for events where the size of the bubble is the damage it created. We can see how serious flood, storm are creating the damage, where we can see despite they are smaller bubbles, they do grow a lot. So climate change has created a lot of losses, which eventually will also become financial loss for corporates. And therefore, naturally, corporates are caring and willing to do more to respond to this. Today, we already have 150 countries or markets who discuss or commit on net zero or carbon neutrality, and they account for more than 90% of the world GDP. This is a global fashion no one can avoid. Where if we zoom into Asia, we already have 19 countries or markets that commit to net zero or carbon neutrality, in which you can see that Japan, Korea, and also Taiwan have this in law. So we are pretty advanced in this area. And we are seeing very good momentum in China, in Southeast Asia, including formalized additional version of taxonomy, for example. These are all quite encouraging. So I think the broader awareness in emerging market should start to create more dialogue between various stakeholders to make things work. Corporates are facing the pressure to do low carbon transition, where you can see global carbon trading market has amounted to more than $900 billion last year. So that is growing very fast. But recently, there are also concerns about the quality of the carbon credit. And therefore, I'm calling for a possible standardize of the governance among voluntary credit market, because it could be unfair to the buyers, the corporate buyers, and some of the project design could also be unfair to the emerging markets. So it's very important, since we have this volume of transaction, we should think about how to self-regulate, or whether the government can also set a better governance framework for the voluntary carbon credit market. And eventually, the voluntary and mandatory market can have some flow between each other. Corporates are also moving further to circular economy. Besides consuming less, we can also recycle a lot of, in the old days called waste. It can be material instead of being a waste. People were using the natural resources at crazy speeds without thinking, how can we save them? And people always use new material because it's cheaper. And so we need better business model for this meaningful project to work. Today, human beings are consuming natural resource at 1.6 times of the planet's biocapacity, and this is not going to sustain. And the past 2 years, from climate change to water, to biodiversity, now to nature. And there is a big call for nature-based solution. To the chart, you can see in 2000, at current stage, the research estimate about 150 billion needed to spend on nature-based solution. But we can see by 2030, it's more than 400 billion. So the need for money is bigger. The financial, physical challenge for both a lot of large developed country and emerging market are also, the challenge is quite high. So we see a lot of dollar amount very big that needs help, but where is the money? And today we can see the nature-based solution, 83% of this money come from domestic public sector. So it's very important to link into international public sector and also to private sector, who can do the bridge among these. The good thing is, this is a research done by Converge. It has estimates for every $1 of public funds in blended finance, it already attracts $4.1 from the private sector. But if we look into detail on the analysis, it works well in developed market, where in Asia or other emerging market, this multiple is actually much lower. So we need to do more work on how to make sure emerging market can also learn how to leverage blended finance. And so far, according to the research by Converge, last year there's already 200 billion of blended finance mobilized. So that includes about 6,800 financial commitment. But if we look into the details, this is a total commitment for blended finance. We can see that DFI, MDBs, and development agencies, they account for about 47%, almost half to the right-hand side. And then commercial investor, around 29%. But if we look into the concessional part, the DFI, MDB, and development agency, they account for more than about 75%. So yes, we commit, but the concessional is very highly sponsored by MDBs and development agency. So how can we mobilize more private sector money is also very important. And then in terms of the blending, the frequency, you can see that concessional capital accounts for 72%. So this is still very public and NDB-driven area. Where in sector, we can see energy, financial services, agriculture, and general purpose and infrastructure. These are the main areas for that. And now I would like to share a few cases which I think maybe we can inspire and we can think more beyond these cases. This company is called Gojo. It's launched by a Japanese young gentleman, Tai Jin-san. I met him many years ago, and he told me he wanted to do microfinance in Cambodia, in India, in Africa. I said, wow, this guy is crazy. Today, we can see how fast it's growing. From 2018, only 15 million of US dollar. Today, they already grant over 900 million US dollar of loan. And we can see into the AUM and how many clients they have already. It's already actually 1.8 million customers. And you can see female, it's quite high percentage. And the default rate, delinquency ratio, more than 30 days. You can see 2020 to 21 is higher because of COVID. But they are trying to find solution for them, help them to repay. And you can see the delinquency ratio in this year has improved as the economy recovers. And by before 2020, you can see the delinquency ratio is quite low. They start with some cross guarantee. And then, for example, in India, once the credit record is long enough, they start to reduce the cross guarantee months. And once they are really stronger, they can be independent. So depending on guarantee, credit enhancement could be a temporary solution if you properly doing good job in their capacity building. This is a simple case, and I think it's in Mexico. And the Swiss Re insurance companies, you can see to the right-hand side. This is in Mexico, in the seashore. They believe protecting the seashore environment and the coral reef is very important for tourist industry. So to the left-hand side of this, you can see hotels companies. They pay the tax, and the government also have funding. They provide a trust fund in the middle, and then Swiss Re provide insurance. If there is a natural disaster or a hurricane that hurts the ocean seashore, they get insurance claim. They can rebuild the area so they can continue to restore the coral reef. So this is quite easy ways. It's mainly from like donation and capacity building. And this is a work by Root Capital. The disease for coffee bean affects the livelihood of farmers a lot. So the Root Capital, they form a fund called Coffee Farmer Resilience Initiative. So they work with development institutions, private corporates, and foundations to deploy the capital. So you can see to the right-hand side, the chart, the bottom part, you can see that includes public money and financial institution, and they provide funding, where in the two humankind in the pink color, they help these farmers to build their capacity. So help them to understand what financial institutions are looking for, help them to improve their business case, and so people can understand they will be willing to provide more help. This is another case. I think this is in Fiji Island. To the left-hand side, you can see there's a grant fund, where to the right-hand side, there are investment funds. So the idea is someone help this project to make it understandable, to help them to become bankable, investable over time. You can always find a few financial institutions, they are willing to do a trial and maybe start with some guarantee, first loss absorption or partial absorbing of the loss. Then they will expand the risk tolerance of financial institution in blended finance. So there are many cases from very basic and just capacity building, donation, and provide insurance policy, or invest in bonds or in the funds. These are all workable. And this is another more complicated, sophisticated one, which I think is also very cool. To the right-hand side bottom, you can see a hydropower company. So with the natural disaster and the climate change gets warming, so the cloud forest may become less humid. And once it's less humid, it cannot preserve water. They will further damage downstream the hydropower plant. So they make a case to convince a hydropower company, we want to protect this cloud forest. It's helpful for your future water stream to secure your future revenue. So the power company is happy to pay if you prove that you can maintain the water flow for them. And so to the left-hand side, very up area, financial institutions and funds and experts, they help this project to do the design and preparation. And after that, they run this project. So there are more and more cases that can give people confidence it's worth a try. And I really think it's a perfect timing for us to showcase to the world, to the commercial sector, yes, you should consider trying. If every institution try 2 projects, the world will be so different. Some cases from Taiwan, National Development Fund has worked on social enterprise and other agriculture-related projects, where the Agricultural Bank of Taiwan has also helped a lot of agricultural loans and also to young generation who are willing to go back to the farm. And we have also a very innovative insurance, which is for all the agriculture goods. You can see, I think, 7 different products, including mango, papaya, pear, watermelon, and kiwi fruits, for example. And all the general insurance company, we share the load. For example, we take care of 2 insurance. Some insurance policy based on the speed of the wind, some based on the loss of typhoon, some based on the flood, some based on the temperature. So the government will subsidize some of the insurance premium, where if some event occurs, hit the criteria, the farmers can get the insurance claim, so they can go back to rebuild their farm. For Cathay Financial Holdings, we are one of the global leaders, I hope, in terms of ESG and climate actions and social contribution. So you can see we have got very good recognition from both international to the right-hand side, and the left-hand side we are also identified as the best family-friendly employee in Taiwan. We care about empowerment a lot. And we focus on climate, health, and empowerment. We care about employee, we care about clients, we care about young generation, and we care about women. And we have accumulated from low carbon investment and loan, infrastructure, inclusive financial products, water resources, all combined, it's about 1.4 trillion Taiwan dollar. So that's about 40 billion US dollar in aggregate. And we are the biggest in micro insurance in Taiwan. A lot of the poor family, all they need is a father or the major income generator who have basic protection. So in case something happens, their family will not get into difficulty. Our commercial insurance market share is 20%. Our micro insurance market share is 30%. So we spend a lot of time to identify what is a weak spot in the society and what can we do. We also, in the bottom part of this, we help the agriculture companies who are in Taiwan, and also I think they participate in some of the ICDF project in Caribbean islands to help these farmers to do better smart agriculture. Cathay, we take care of guava and mango insurance. So it comes from some funds from the government to subsidize the insurance premium, where we set some criteria on the claim settlement. So there are many ideas that we can work together. And this is a snapshot of our journey since 2014, when I started to lead the responsible investment team. You can see 2016, we joined Asia Investor Group on climate change. Myself is a chairperson now. In 2017-18, we are the first Taiwan financial institution to engage the corporate we invest, accent to do better climate governance. We are the first Taiwan financial institution who joined TCFD in year 2022. We are the first one joining RE100. We are certified number 6 in Asia, I think, by SBTI. And the past year and this year, we have joined a lot of nature-related initiatives. We think the best way is go to international initiative, work with them, learn from them, and try to bring this insight back to Asia, back to Taiwan, so we can localize and make people feel they can also contribute. It's already 7 years. We host Sustainable Finance and Climate Change Forum. And this year we have World Climate Foundation CEO Jens Nelson who joined us. And we are very honored to share with you for the past 3 years, corporate delegates that attend our conference accounts for 75% of Taiwan's market cap, about half of the country's emission. So if everyone do a little bit everything, we can create very big influence. And I always want to share with people, don't think about number one, don't think about best in the world. We can prove we can make money from being best for the world. So that's my presentation. Thank you.
Thank you, Ms. Cheng, for that incredible presentation. That's good cases, really make a lot of hope for the world. So finally, our last panelist is Mr. Tony Ringham, which is the ESG director from the British Business Bank. So we'll welcome him with a round of applause, please. The floor is yours.
Thank you very much. So it's a pleasure to be with you. I'm going to present some thoughts and experience from the UK in the context of the British Business Bank is not an international finance organisation, but I've tried to draw out some lessons which may be relevant to application within countries, whether the finance is coming from a domestic bank or from an international bank. So first of all, let me introduce who we are and roughly how big we are and so on. So we are wholly owned by the UK government, and our mission is to drive sustainable growth and prosperity across the UK and to enable the transition to a net zero economy by improving access to finance for smaller businesses. So we exist wholly to help small and medium-sized enterprises, including, of course, startup and new businesses. We have 4 strategic objectives. The first 2 are ones which we've had since we were founded, driving business growth and backing innovation. But more recently, we've added 2 which really express the social and environmental objectives that we have. So unlocking potential is talking about access to finance for entrepreneurs, regardless of where they are in the country and also who they are, so their background, gender, ethnicity. And then building the modern green economy, as it says, is actually not just about climate change. Of course, that's a huge challenge. But as other speakers have talked about, we need to adapt to circular economy models and reduce our impact on nature. We support about $15.5. I've translated everything to US dollars to be common with other presenters. So $15.5 billion, but that's including the private finance that we leverage in when we make public investments. So our own balance sheet is just over $4 billion. And we also have, we've securitized loans of almost $1 billion now, and we supply guarantees of just under $1 billion. Actually, during COVID, that was much, much larger. We had emergency response guarantee schemes in COVID that was around £80 billion, so $100 billion. but the normal business that we do when we're not coping with a disaster is about 0.8. And that means that it's about 90,000 businesses that we are directly helping to finance, and we don't invest directly in them. We work through over 200 financial institutions, ranging from venture capital equity investors to small credit institutions, as well as mainstream banks. So this was very interesting to prepare some remarks for today, because I don't think that the term blended finance is particularly used domestically within the UK to describe what we do. It is very much, I think, an international development finance term. But of course, we are still doing things which you might describe as blended finance. So here are some examples of, I think, the way that we are using public money to combine with private money and to also, importantly, build the capacity of private sector finance institutions. So this first product is about building a pipeline of businesses which, after our initial intervention, should be wholly bankable by private sector institutions, but they will not finance the startup because it's too risky. And so this product is a loan, but it's taking equity type risk for startup companies. And it has a very strong social agenda to it, as I'll show you on the next slide. So it's a very simple fixed loan product, fixed rate of interest. It doesn't require any guarantees. It requires no collateral. So it is very suitable for people starting a business for the first time. They don't necessarily have any wealth. They don't own any assets. They don't have any track record. But if they have a good idea and they can write a good proposal, they can access a loan. And this is how it performs. So over the last 10 years, we've done around £1 billion of these loans, over 100,000 businesses, at an average loan size of only just under £10,000. So a lot of these are very small loans. And in terms of the social impact, so 40% of these were to businesses that were founded by women. Now, obviously, it would be good if it was 50% or more, given that that's half the population of women. But this is a much higher proportion than you'll find in business lending generally that is going to women. Particularly pleasing is the performance on addressing racial inequality in access to finance. So 21% of these startup loans went to people from ethnic minorities. That compares with about 14% for the population as a whole. would be defined as ethnic minority groups. So a larger proportion going to ethnic minorities who traditionally have not had a fair share of finance, of business finance. And then also, finally, 31% of these loans went to people who were out of work, who were unemployed. So people very marginalized economically, and yet were able to successfully start their own business as a route out of unemployment and a route out of poverty. So the second set of interventions, I think, which also fit this description of blending public and private finance. So the first approach is where we actually provide finance on the same terms as private investors. But because we have gone in first as the investor, this encourages and gives confidence to private money to flow in. And so this is the cornerstone investor approach. So when we create new venture capital funds, often we're approached to be the first investor in the round, and maybe we'll take less than 50% of what is required. But once it's announced that we are making the first investment, then it's easier to raise private money to fill the rest of the round. So that's cornerstone investment. The second way in which we build a financial ecosystem is to support new fund managers. So particularly for equity investments, fund managers are judged entirely on their track record. So how can new people come in? And there's the danger that you end up with a very small number of large venture capital firms controlling the whole market, which isn't healthy for competition, it's not healthy for diversity. And so we will help to support new fund managers. And here we are, this is on concessionary terms, we are taking more risk, but we think it's important to build, to broaden the number of firms in the market, and this is how we do it. Similarly, we also support new banks and credit institutions for the same reason, because it is difficult to attract private sector capital to start a new credit institution, because it's difficult to show the track record. And we've done quite a lot of investments into new banks, but also non-bank credit institutions, and that has broadened the choice for small businesses and the number of different products. And we firmly believe that, there are 5.5 million small businesses in the UK, and it's a very diverse population, and the needs of each business can be very different. And therefore, it makes sense to have a diverse range of finance providers, because then it's more likely that they'll be able to meet the needs of every single business over just having one or two very large institutions. And then finally, and this is a very important one, I think, where actually it's interesting, the previous examples that Ms. Cheng was showing, that the use of guarantees can be very important, I think, in our transition to climate change, because it is, of course, the transition to climate change is highly uncertain. It's all about risk. Credit guarantees can really help to mobilize private sector money, but with a public sector guarantee. And so we're expanding this part of our business. And finally, this is a very important element of the startup loans, is public funding for business advice, which private sector finance institutions, particularly increasingly with regulation in the UK, where they used to perhaps give business advice to startups and small businesses, they now are very wary of giving any advice because if the business fails, they are concerned that they will face legal action. So they're now very cautious, and this has created even more of a problem, because we consistently find that one of the barriers to business success for new entrepreneurs and smaller businesses in particular is that they need good sources of advice to help them start their businesses. And so public funding for business advice, I think, is a crucial part of building a public and private ecosystem. And so for the final part of this presentation, I wanted to talk about just transition. And there's been quite a lot of activity in the last 2 years in the UK, as well as globally, but I will share with you some practice in the UK about understanding how we can actually plan and start to implement a just transition, both for companies and also importantly for financial institutions. So the first one, I was on the steering group for this initiative. It was an alliance of universities and banks and investment companies called Financing a Just Transition Alliance. They produced a report just over a year ago, October 2022. And they said there were 3 principles for ensuring that the transition to net zero would be socially just, and that all financial institutions should implement these 3 principles. So the first is obviously to identify the social risks associated with changing the economy to low carbon. And you could call this a do no harm principle, which is to ensure that core human rights and labour standards and social conditions are always protected when you are financing new business models and new businesses. The second one, actually, which is closely related, is to see that actually the economic change to new business models and new cleaner businesses is an opportunity to build businesses which actually perform better on social conditions, have a better approach to diversity and supporting greater inclusion in both the products that they are serving, so more inclusive to their customers, but also more inclusive to their workers. I think what is interesting for me is the third principle, which you'll see as a repeated theme throughout the rest of these slides, which for me, of 20 years in sustainable finance, has always been talked about a little bit, but it is becoming very prominent now, this idea of stakeholder engagement, or as the Alliance put it, a meaningful dialogue and participation with civil society groups, trade unions, government and industry stakeholders. So the second report, so this came out 3 months ago, is the Transition Plan Task Force. And obviously there are international efforts which on sustainable reporting and guidance, which all refer to transition plans. So the new International Sustainability Standards Board, Standard 2, says that entities should disclose their transition plan. Equally, the Glasgow Financial Alliance for Net Zero has principles around transition plans. So the UK government mandated the Transition Plan Task Force to produce guidance and specific sector guidance as well for how this would actually work in practice. And that's the document, the disclosure framework. And what's, again, interesting here is that there are 5 categories of disclosures. The third one is describing how you engage. Again, participation and engagement, both with the value chain, your suppliers and customers, across horizontally with industry and trade bodies, and then also how you engage with government, public sector and civil society. And this is interesting because it is encouraging greater transparency over what corporations are secretly asking governments for, at the same time as publicly they are portraying a green and socially just face. And this is a problem I perceive quite often with companies, that they are not very honest about the difference between what they are asking for in law and what they are telling their shareholders and the public. But also, of course, the engagement with civil society is interesting to see that is in there. Now, what do we mean by engagement? This is from some research that I led before I joined the British Business Bank. So this isn't British Business Bank research, but I thought you'd find it interesting. So the traditional academic literature on engagement all dates back to 1969, an American academic, Sherry Arnstein, who talked about 5 different levels of engagement. Now, all of them have their place. So at the bottom rung of the ladder is simply informing. So this is reporting and transparency. It's a very important part of engagement. But then it gets a little bit more interesting when you allow to have information to come back to you. So this is receiving information, but this is still very passive. You're not actually at this point face-to-face with any groups. That starts to happen with engaging. And this is where you enable conversations, but here you're only really allowing people to give you their opinion on the plan you have already produced. So it's still useful, but it's a consultation, basically. Consultations very rarely change the plan that is being consulted on. So then we climb to the fourth one, collaboration. Now this is where you engage with people before you have written your plan, and you invite their input and their feedback and their thoughts and their experience and their wisdom to help you write the plan. The fourth level of engagement. This is now very high quality participation. The fifth and final one, the highest level, is where you share power. Now this is very unlikely as an approach for private companies, but there have been very good examples of this where city governments, for example, have actually given the final decision to citizens. So participatory budgeting is a very good example of this in the public sector. So all I would say is, when we are talking about participation, if we're talking about engagement, try to be very clear about which level it is that you're engaging, that you're doing, and be really clear, because often an expectation is raised with civil society that you are having a higher level of participation. They think they're going to have a higher level of participation than you're actually intending. And then this leads to disillusionment and criticism and disappointment, which nobody wants to see. But why is it beneficial? Why is all this guidance telling us to engage with stakeholders in doing transition plans? Here's some research, again, that I worked on about 4 years ago. And it was actually engaging with UK citizens around economic policy, which is generally considered an expert domain, and ordinary members of the public perhaps don't get into the technicalities of economics, but we showed that they can absolutely engage with complicated economic policy decisions. And what we found that the benefits of engaging with citizens around economic policy was, firstly, that it helped to help citizens understand better the complexities of the challenges that we're facing, which raises the overall quality of dialogue and participation. But secondly, the citizens themselves are bringing new ideas and new policy and knowledge and experience into the decision-making process that the experts didn't have already. So the combination of expert knowledge with citizens' experience leads to a better overall decision and plan. This, therefore, similarly, the third point is that it may include aspects of economic policy that the experts hadn't thought were relevant, but turned out to be very relevant to the citizens that are experiencing the effects of economic policy. So it leads to more complete and inclusive, holistic planning. And then finally, it has an impact on the economic institutions themselves, because it's not just a one-off engagement that improves a particular plan, but it can change the attitudes and the behavior of the experts within the institution themselves, so that when they make more decisions and future plans, even without engagement, that they will have had this experience and it would have broadened their thinking and knowledge about how to write a really good transition plan, to get back to that. And that's where I'll end finally. The final report I wanted to tell you about, actually, and this is nice to finish off on today because this was initiated at COP26 in Glasgow, where the UK government convened an independent panel called the Impact Task Force, and they were asked them to say, well, could you identify for investors in particular what would make investment in transition to net zero a socially just transition? And so, but it can be used, it's aimed really at investors, but really it's useful for anybody to read, not just financial institutions. And the three elements that they included must always be involved when financial institutions are approaching just transition. Not surprising, because the first is the environmental imperative, the second is the social imperative, but the third, once again, interestingly, is about increasing community voice. And it is the role, once again, of involving the people, the citizens who experience the impacts of climate change and who will be affected by our investment decisions, should be included in that plan. So that's it for me. Thank you very much.
Thank you, Mr. Tony, and everyone. So we will go to the chairs up front so we can have a wrap-up discussion for this interesting topic. Okay, thank you. Okay, thank you everyone. So before I start with some questions, so we'll wrap up our discussion today. I want to ask if there is any question from the public today, so we can direct to our speakers. Okay, Mr. Thomas.
We are very excited that we can hearing some exciting sharing from our excellent panelists here. And I just one question, because you all people, you know that in the COP27, COP28, we are discussing about loss and damage. We just want to know the opinion from the different, for example, like development agency and the public agency, bank agency, and also private sector. How do you think about the loss damage, and how you think the function, how the loss and damage foundation will be function well to give the resources to the people should to get. Thank you.
Okay, you get it clear? Who wants to? Okay. Oh, well, I can resume your question and you correct me if I'm wrong. So he wants to know how can financial institutions work on loss and damage to finance the vulnerable communities, as well as you were talking on this blended finance scheme, but from the loss and damage approach.
Yeah, thank you.
Well, I think one idea about how private sector financial institutions can engage in the idea of loss and damage is actually through the new task force for nature-related financial disclosures, because, I mean, it's not really with the traditional sense of loss and damage compensation, but large global corporations, I feel, have been responsible for degrading natural systems, particularly in developing countries, as part of their supply chains over time. And that is a form of exploitation, really, whether intentional or not. But now the focus on nature restoration changes the mindset, where now that global corporations will need to disclose their impacts on nature throughout the whole global supply chain, they have an incentive to partner with local agencies and small-scale producers in developing nations to help to collectively restore nature. And whether that's through financing nature restoration projects or just working with suppliers on more favorable terms, if they themselves do invest in nature restoration. I think this is a way of redressing the damage, if not quite the same as a loss and damage mechanism. But it is, I hope, a way in which private sector action now on nature restoration can help to repair the damage that they've previously been doing over the last 100 years.
Thank you. I do agree with information. People can know the situation. And if we have more standardized disclosure framework, it's helpful. Because every company, like Tony just has mentioned, corporate can do their own explanation, exaggerate their effort. On one hand, they announce they participate all the initiative. On the other hand, they lobby the government. Don't do anything nonsense. Yeah, so standardize what corporate are doing is very good. Standardize some information, make it understandable by the private sector. I think it will be very helpful. And the other thing I want to add is make it approachable. For a lot of projects, if they are smaller, they don't have the access to information. Where for investor, we need project, but it depends on the visitors, right? So if they don't come to us, we don't know. So end up many projects they don't know they can come to a financial institution. And then we receive a lot of innovative projects, and it's so much headache because many of these, especially new projects, the funder is so genius in science, but they are so carefree in management, and they are so naive on financial and capital planning. So, and now when they come to you, they already run out of money, and I'm under so much pressure if I don't say yes. But they need long mentoring. So I think if we have a platform that the project and the fund provider can easily, to find something. For example, I'm interested in island countries, or interested in renewable project, for example, or I'm interested in gender equity. They can easily search in that platform, where with a platform, the smaller project can also get support. Otherwise, it's through some intermediate. Sometimes they just don't know where they can go. And if there's someone to help them on corporate governance, project governance, you borrow money, you got to pay back. So you have the next bigger ticket, rather than through a third party's help, and end up they don't really take this governance and repay their credit as serious. So end up it's a dead end. And lastly, they do need a mentoring. As I said, the product strategy, management, and financial planning.
Okay, let me share some experience with ICDF, because ICDF is an NPO organization in Taiwan, and this issue is very pretty sensitive for us, because the loss and damage is just talk about the fundings. How can mobilize the fundings to the small island states, especially these kinds of states is much more affected by the climate change. And for NPO point of view, I would think that that's very important for these small island states to have some kind of due diligence work. If we want to raise some fundings for loss damage from the other donors, others international partners, they are sometimes they are pay more attention on how to supervise and how to know the next work they would like to do for their infrastructures or for their social development works in these small island states. So for my personal view, I think these are new issues for foreign aid agencies, and we are looking forward to have a small discussion with our allied countries or our friendly countries to know more about how they would like to do for their climate actions. And I will also think that maybe we can have establishing more special funds for this loss and damage for this specific countries, because they are totally different in different countries mandate.
Thank you. Well, that gives me to one of my questions, and it comes from the fact that capacity building is a cornerstone for climate action, right? And we're all well aware of it. So I would like to reflect on what are the challenges and the opportunities that financial institutions have seen about how they can contribute to make this part of climate finance. Because you mentioned some mentoring programs, you also mentioned the mentoring program. So what are the big challenges and opportunities for financial institutions to make capacity building a part of climate finance beyond the traditional approach of subsidies and grants?
It's actually very simple and very easy. The biggest challenge is, do you want to do it? And first of all, yes, we are here. I'm happy to talk to the entrepreneurs, startup, and their projects. Usually, I care about how they started. If they start with a very good intention, why not helping them to succeed? And then, but more than maybe half the time, you will find the team, they really fall in love with their product. And they thought it's an honor for other people. You don't know the product, you just give me the money. So a right mentality, in a proper company, you have CEO, you have chief marketing officer, you have the lead of operation, you have lead of finance. So some are good in product, some are good in management, some are good in the stakeholder inclusion and communication and capital planning. So the team, if they understand they do have areas to improve, we would love to talk to them, because only if they succeed, we can nurture more future star companies. So they need to be open-minded. And then I do appreciate if a team, you inspire them rather than mother them. Right? So if they listen to an idea, they really get it done, they come back 3 months later and say, I got this done, what's next? Then you will feel so excited. All your contribution, it's like Tony mentioned about impact, and they show you their performance, you will be more willing to bring more resource to them. And then do they want to excel? Do they want to be a leader in their area? Because only if you get the ambition, it's worthwhile for us to provide this resource. So I want them to do better than me. If they had ambition, anything learnable, you should not be afraid.
Yes, we always have some challenges because when we have discussing with the microfinance institutions to carry out some our for our microloans, and we find that the credit system has different levels of bankings. The banking is the top of one, and the microfinance institution and credit unions, they are different mandates. So first of all, I think the capacity buildings work has to not only provide to the microfinance institution, but also you have to some resources for the client, because you not only just offer the funding for them, but you don't have any skill trainings or empower their financial literacies. How to build up their bankable is very important. So I think the challenge for microfinancing institutions is that they have to change their mentalities to accept these kinds of disadvantaged groups as their potential clients in the near futures. Let's expand in large scale operational areas to different areas. That's my answer.
Well, on this question of capacity building in companies or the advice, I think there are one challenge is that, as I mentioned, there are about 5.5 million small and medium-sized companies in the UK. At any one time, a very small proportion are actively seeking finance. And so the question is, how are you going to help all of the rest of them transition to net zero if they're not actually engaging with financial institutions? So I think this is a very good reason for encouraging cross-industry collaboration, which includes financial institutions, but also public sector institutions. And indeed, business advisors. We do a lot of work with accountants in terms of how we can collectively help to advise businesses on sustainability, on how they can transition to net zero. And there's one very good example of a cross-industry collaboration right now, which we're helping to sponsor, which is aimed to help it make it really easy for small businesses to measure their carbon emissions from electricity consumption by simply making use of smart meter technology and combining it with other data into accounting software, so that small businesses who really don't have the time to engage in elaborate carbon calculators and other don't have the resources that large companies have. So again, this is a wide industry collaboration, including government and private sector, to try and solve that technical challenge for small businesses so that they can at least understand what their journey to net zero might even look like and make good decisions.
Thank you very much. So to wrap up this discussion, because we're almost reached our time slot, I would like to ask you to give us a take-home message on whether we can reflect for the public and everyone that's watching this live stream. So how we can establish this people-centric financial mechanism for a just transition, considering all the burdens that vulnerable communities and rural communities have from your experiences with small and medium-sized companies?
I think that I guess my reflection from all of the conversation is that this idea of participation and involving people in planning, transition plans, is very powerful, and that's because it's a change in mentality from having very good social and environmental goals, but doing things to communities to try and achieve them, is we change the mentality to doing it with communities in order to achieve those goals. And that's possibly the most important message. And the result will be better as well as fairer.
For medium and small business, there's only one advice: don't be shy, and believe everything is learnable. Be willing to understand your counterparty, what they are looking for. And I think if you are humble, respect the application, and do self-due diligence, get prepared, there are opportunities there to support you.
I will say that we need to build more close linkage between the government levels and the institutional level, as well as the community level together, and to scale up the harmonize the effects, not only for financing, sometimes for human resources together, and to centralize and also to mobilize the funding from external resources. That's much more easy to working together to make some foreign aid work based on people-centric ideas.
Thank you very much. So that will be for our session. I hope you all enjoyed this really incredible discussion and examples we had from all around the world, from Latin America, from Europe, from Asia. So it was indeed a very good opportunity for learning to myself. And I think that for a region where I come from such a high vulnerability to climate change, it really gave us a lot of thought for the next opportunities that are coming with small, medium-sized, and micro-enterprises from the vulnerable place where climate change is not gender neutral, and it's definitely something we have to work with the communities so we can respect how adaptation and mitigation leave no one behind. So thank you very much.